Hey there, future homeowners. So you've just cleared the first hurdle of homeownership. Your mortgage is approved or mortgage pre-approval. But hold up, before you start celebrating, there are a few pitfalls to avoid after your mortgage application is approved. These pitfalls could turn your dream of homeownership upside down. I'm going to talk about that in a minute. Hey there, this is KG. I'm a realtor in Maryland, DC, and Virginia. Your guide through the twists and turns of real estate. And today, I'm spilling the bean on the common mistakes you want to avoid after applying for a mortgage. So let's face it, the journey to homeownership does not end at approval. As a matter of fact, it's just the beginning. So, before I go through the pitfalls to avoid, I want you to do something for me. Please hit that subscribe button if you have not already subscribed. And if you are already a subscriber, thank you. Drop me a comment so that I know you're there. If you have any question, please definitely drop me a comment and I will respond to you. So the first one is you want to make sure you avoid these pitfalls after you apply for a mortgage. And the reason why we're saying this is because you get a mortgage approval or pre-approval, your mortgage may not still have final approval. So the first one is don't make any large purchases. I am not even talking about the home-related purchases. There are some purchases that can disqualify you from that loan. Any large purchases can be a red flag, and it is a red flag for lenders. If you get a new debt, new furniture, new car, this will change your debt to income ratio. It will go up. And once that is done, you may not actually qualify for that mortgage anymore because higher ratios make you a risk borrower and you may not qualify for that loan. So I want you to resist the temptation to make any purchases that require credit until after you close. Furniture, appliances, don't do it. Second is, don't co-sign loans for anyone. So when you co-sign loan for anybody, you are making yourself accountable for that loan success and repayment. So when that obligation is now hitting your credit, it's going to affect your debt to income ratio as well. Don't co-sign. Even if the person promised to pay back and you're not going to be making the payment, it doesn't matter. The lender is looking at you as you getting a new loan. It will count against you. Do not do it. Don't co-sign. Third is, don't switch your bank accounts. Lenders need to source and track your assets, your money asset, right? And this task of doing that is much easier when there's consistency because they're going to ask for 3-4 months bank statement. So before you transfer money into your bank, you want to talk to your loan officer. So do not change your bank account at this point. 4, don't apply for new credits. Do not apply for new credit. Doesn't matter if it's a new credit card, new bank card, new store card. When organizations run your credit, mortgage, credit card, auto, furniture, it will have impact on your FICO score. What that means is lower credit score can actually determine if you're going to get that house anymore or not. And it may affect your eligibility, or your interest rate may actually jump up. 5, don't close any accounts. So many buyers sometimes believe having less available credit makes you less risky and more likely to be approved. They want you to have credit. And also, a major component of your score is the length and the depth of your credit history, as opposed to just your payment history. So the total usage of a credit as a percentage of available credit as well. So when you close, it affects your credit score negatively. Negatively affecting your credit score means your credit score is going to go down and you may not qualify again. So do not close any account. The sixth is you really want to discuss any changes with your lender upfront. If there's any changes that is going to occur or you're expecting to occur, you want to talk to your mortgage lender. Changes in your income, in your assets or credit. If your job or employment status is going to change after you get pre-approval, you want to share this with your lender because you do not want to be surprised. Ultimately, it is always best to fully disclose and discuss your intention with your loan officer before you do anything financial in nature. I always tell my buyer, do not sneeze on your credit until you finish buying the house. Okay, so if you are ready to navigate the housing market after you pre-approve or before you be pre-approved, please hit that subscribe button, leave me a comment, and let's make your journey to home ownership a success. I'll catch you in the next video. Happy house hunting.